Hey guys, what's up? This is Andrew for TRENDLINES.com. So in this video, as many of you were asking me, I'm going to show you a quick presentation about Fibonacci trading. So we're going to see retracements, projections. I'm going to go through the entire method. You're going to see that it's actually better to use when associated with Elliot Wave theory. So I'm going to show you here the method, many examples, and we're going to discuss about everything that we can find on the internet and try to see what is true and what is not. So let's get into it. Alright guys, so maybe the very first thing I'm going to introduce you to the Fibonacci sequence. So basically Fibonacci is a mathematician from the 12th century. This guy was very appreciated by the king at his time. He was a bit a phenomenon because he was just a genius. And when the king invited him at his court to solve some enigmas, to test him, he actually just kicked everybody's ass. He was the best of the best. And this is the reason why he got so famous, and we still talk about him today. So what made him so famous? The first thing is its sequence. So I'm going to remind you the Fibonacci sequence, and I'm going to quickly explain here how he was actually able to find it. So it all starts with rabbit, guys. So basically the Fibonacci, the golden number, which comes from the Fibonacci sequence, can be found everywhere in nature. And Fibonacci identified it using a small game with rabbits. So we're going to assume that a pair of rabbits can have 2 babies every month, and that they need 1 month to be fertile, to be able to have babies themselves. So you start at the first month with 1 pair of rabbits. Then the second month they get fertile. So the third month they're able to have babies and they remain here. And the month after they're still here, their babies become fertile. And they have 1 more pair of babies. So the 5th month, they're still here, their babies are still here, the new babies became fertile, they give birth to new babies, and their first babies who are fertile now are able to have babies. Okay, so this is where we are coming from. So basically 1, 2, 3, 5. All right, guys. So this is the Fibonacci sequence. 1, 1, 2, 3, 5, 8, 13. So every number is the sum of the preceding 2 numbers. 8 plus 13, 21, 21 plus 13, 34, 34 plus 21, 55, so on and so forth. So basically, what is the Fibonacci sequence? It is an additive sequence of numbers that nature employs in many processes of growth and decay, expansion and contraction, progress and regress. So the golden number is the ratio towards which converge two consecutive Fibonacci numbers. All right, so now everything I guess is not clear yet, but we have defined what is the Fibonacci sequence, how he found it, and what is the golden number. So first thing I want to show you guys is that this golden number can be found everywhere in nature. All right, so in every basically living, growing processes. So everything that contains a spiral, you know, for example, like a snail, like a Romanesco broccoli, or all these living plants or animals that have this kind of shape are actually built by nature using the golden ratio. So here you can find the golden ratio, for example, in the spiral between every border. So between the center and the border of the spiral. So between this and this, the ratio is the golden number. Between this and this, the ratio is the golden number. Between this one and this one, the ratio is the golden number. And between this one and this one, the ratio is the golden number, so on and so forth. So it's the first thing that we need to be aware of, is that this golden number is everywhere in nature. It is also in the human hand. For example, in every normally constituted person, if you take the ratio between the tip of the finger and the next part of the finger, it is equal to the golden number. Between C and B, it's the golden number 2, and between B and A, it's the golden number 2. And you can even go further. Between the hand and the forearm, it's the golden number, and between the forearm and the entire arm is the golden number as well. And even between the arms and the full body is the golden number. So the golden number is everywhere in everything that is growing, and markets are nothing more than a growing process because it reflects human economy, right? So the theory is that it should follow somehow this golden number. And it's more a question of belief because, you know, science has not explained everything yet. Here, we don't understand why this golden number is somehow part of a code that is creating every living plants or animal or, you know, human beings. But I believe personally that this golden number has, you know, more complex explanation that we still don't fully understand. So the only thing I would personally do is to accept the fact that it's here and try to use it. So let's have a look now at the markets. I'm going to show you the two different applications that we can have using Fibonacci. So either you can use it as retracements or as projections. So we're going to start with retracements. So I'm showing you guys so many things about that on the internet. So I'm here going to probably show you what you already know, but I'm going to go one step further and I'm going to tell you how to actually, to me, use this method at best. So the first thing we're going to do, we're going to divide. So I take the S&P 500. I'm on the weekly time frame. I started in 2009 because this is, for me, a perfect growing process because it's developing very well. So let's see how good or bad this whole development is following the golden number. So first, we need to identify some moves. So we just make waves, okay? So this is the first thing to do. We make some waves. Easy, right? For now, I didn't do anything complicated. Now, we're going to start to check where is the retracement of each wave going. Because I remind you once again that Fibonacci is saying that basically everything that is growing is making 3 steps further, 2 steps back. And this is giving you roughly the Fibonacci ratio. 3 divided by 2 equals 0.67. Fibonacci number is 0.618. But if you do this forever, it's going to converge towards the golden number. So here, let's measure. You know, let's have a look first at what we're having. So I measure from here to here. So for example, here it's 23.6. So nothing impressive. Okay, I keep doing that. Okay, first thing, very interesting. I take this wave, I check how deep it has corrected, and I found that it got a perfect reaction on the 61.8% retracement of this move. Interesting. Okay, I keep doing that. Now I can do it from here to here, but as you can see, guys, so here 78.6%. So it's still a Fib ratio. So just one more thing I need to tell you guys is that Fib ratio are 61.8%. Okay, because this is the golden number. I mean, 1 divided by the golden number, then 38.2 because it's 1 minus 0.618, 50%, that is just half of the move, very important, 100, 0, of course, and the smaller one, 23.6% and 78.6%. Okay, so those ones are less used, but as you can see, sometimes they give us reactions. So for now, I'm not talking about what to do, I'm just checking the facts. Okay, but I can already tell you that here, for example, what is interesting to check is not the retracement from here to here, but the retracement from here to here, okay? That is 38.2%. And I'm not coming to that right away, but 1, 2, 3, 4, 5, okay? So just a first example to see that if you don't use Elliot Wave theory, you might not fully grasp the power of Fibonacci. From here to here, okay, 38.2%. So for now we have this one 23, this one 61.8, this one 78.6, but 61.8 of the whole move up. Here 38.2, so it's quite, for now, giving good results. Then next one from here to here, 38.2%. Okay, interesting. Then from here to here, okay, 50%. Okay, so still a Fib ratio again. And here it's not working anymore, okay, because we have a new low. So then you need to ask yourself, what is this move correcting? So the only way to answer that question is now to do some Elliot Wave theory, right? So very quickly, Elliot Wave theory is saying that moves up develop in 5 waves, 1, 2, 3, 4, 5s, and moves down develop in 3 waves, ABC. And we're gonna see some projections, but it's too early. First, just remember we make 5 waves up and 3 waves down. So here, the first thing I need to understand this move, what is it correcting? Which move up is it correcting? So like I said, 1, 2, 3, 4, 5. This one quite easy. Then here we have an ABC. Okay. Then here again, 1, 2, 3, 4. And good question, but 5, right? Yes, 5. So then I need to have 5 waves here and we can do something like this. Okay, so it's working. So then I know that this move down is correcting this sequence, okay, from here to here, okay, because I have 5 waves and this is how it's working. You need to identify which move up we are correcting in order to use your ratios. If you don't apply it to the right portion of the price action, you won't have those reactions as clean as they would be if you applied to the right wave counting. So here, now if we measure from here to here, papam, 50%. Okay, so for now, what we're having is we see that on the S&P 500, since 2008, if I check the retracement, so basically the bigger picture is here, guys, all right? 1, 2, 3, 4, and we're doing a 5, right? Okay, so let me just change the color of that. Let me change as well the degree. This is an intermediate counting. Okay, and now we can see that every retracement inside each wave is fitting with a golden number ratio, and each correction in the larger degree wave counting is also fitting with a golden ratio. As you can see here, 38.2%, wave 2 from 1, and wave 4 of 3, 50%. So it's still a golden ratio, and I'm not going to do it again, but we've seen that each time here it was correcting. Have I checked this one? Yes, and this one 61.8. Okay, so you can see here wave 4 61.8, wave 2 38.2, wave 2 here 38.2, wave 4 38.2. So all of them, guys, all of them. Okay, so once again, I know the price action after it happened, so it's not easy at all to make it during the live price action. All right, everybody that is going to tell you it's easy to make money using fibs is a liar. It's not easy at all, and you need, once again, to associate it very well with Elliott Wave counting to know where are the ratios. Otherwise, you're just going to apply the retracements on the wrong move, so it's not working as good as it could. And here, one more thing, yes, and this one we checked. So here, guys, I have on the S&P 500 since 2008, I have a breakdown in waves that follows Elliott Wave theory, and that follows that every wave, sub-wave, is retracing to a fib ratio of the previous move up. So it's, to me, already very interesting to notice. It's the first thing that I wanted to show you. So now that you know that, you are able to try to predict. For example, here, guys, we're in the 5th wave, right? So in this 5th wave, to me, we did maybe 1, 2. Okay. So we don't really know if this one is complete or not. Is it a 1, 2, 3, 4, 5 already complete? Maybe. We don't know. It's not obvious here at all. I think we have a 1, 2. We have an ongoing 3rd. But if this is a 2, you see, this is likely not to be a 2nd wave, guys, because here, or maybe a very shallow one, okay? So we don't know, but what we know is that at some point, this whole move is going to correct, okay? So we don't know if we reach the top or not yet, but when it's going to correct, it's probably going to go to the 38.2%, so 3,650. So it's a very interesting information to have, right? To know that at some point, the S&P 500 would probably be trading at 3,700. So I'm not saying this year, maybe next year, and maybe we're going to move higher before we correct. But ultimately, we're probably going to come back to this level because this is how things are happening forever. So, okay, first information we can get. So now I want to show you something even more interesting, is that this is going to help you to buy the dip once again. So 38.2%, you can start buying the dip, 50%, 61.8%. The truth is that it's going to depend on each wave we are doing. Elliott Wave, Elliot, for example, identified that 2nd waves usually correct to the 61.8% retracement, 4th wave 38.2%, okay? Here and here. In reality, that's not what I see. what I see is that it's randomly the 38.2, 50, 61.8, one of those three, all right? And it's, to me, very random. So I don't fully agree with Elliot. I mean, just on this, of course. And what I am personally doing is that, you know, I split my orders at 38.2, 50, 61.8. I'm buyers at all these three levels usually. And then I put a stop loss around 78.6%. So I'm just going to show you, for example, here, I would be a buyer. So this is how you can start using fibs. All right. This is a method that I'm giving you guys. You can start buying at 38.2, add more at 50, add more at 61.8, and stop everything here. And if you do that, I mean, if you would have been doing that on the S&P 500 for the past 30 years, you would have generated a lot of profits because the S&P 500 is going higher, of course, but you would have beaten for sure the performance of this index because you would have been entering each time almost at the low of the waves. So this is how you can make money using Fibonacci. But once again, guys, I'm telling you that's not easy. My advice would be, so depending on the market you are trading, but sometimes to forget about the 38.2% because we can see that sometimes the corrections are deeper, and to buy, for example, at this level and stop, for example, everything here. Okay. But if you want to be more aggressive, you need to start buying here. Okay. On the S&P 500, you would have missed most of the moves if you don't buy the 38.2%. On other assets, you better off waiting a bit more. So it really depends on what assets you are trading. On the S&P 500, personally, I wouldn't wait for the 50% when we're going to retrace this whole move up. I'm going to probably enter the 38.2%, which is 3,700, and actually even before, right? So it really depends on what kind of assets you are trading. So now let's have a look at Fibonacci projections. All right, guys. So now I'm going to show you how to use Fibonacci projections. So we're going to stay on the sum market for now. Then I'm going to show you on Bitcoin. Okay. And we're going to try to see what kind of projections we had in the past. And we're going to try to deduce from that how we can predict some targets for example, this fifth wave. And I can already start from here because Elliot already did that work. So, you know, I can do it again, but I can also start from what he did, right? And he said that it really depends on which wave is extended. So basically, he can break down the market in 5 waves almost every time, 1, 2, 3, 4, 5. And depending on which wave is extended, the fifth wave is going to be a projection ratio of 1 plus 3. So basically something like this. Either the fifth wave is equal to 0.618 times 1 plus 3, or if the fifth wave is extended, it's 1.618. Okay, you just divide this by this and you get the numbers I'm telling you. So we're just going to keep that in mind, and we're going to observe on the market what is happening in the past. So we want to have a 5 waves completion so that we can analyze the move, right? So we're going to here do some Elliott Wave counting quickly. So 1, 2, 3, 4, 5. Okay, this is the first thing we can do, and we are going here to apply this method. So we're going to measure 1 plus 3, and we're going to apply it to the bottom of the force. And very interestingly, we can see that each time, so basically you have different ratios of fibs. Okay, the first one is the 1-to-1 relation. So here it was at roughly 500, and you can see that every level, and then you have the golden number projections. So 1.618, just to explain for those who not fully understand what I'm doing, you measure 1 plus 3, and you're going to assume that this is your unit of measure, and you're going to apply this unit of measure to the bottom of the fourth wave. And then, so the 1-to-1 means the move is going to be the same. I'm here using a log scale, that's why you don't see, but actually the 1-to-1 means this size is equal to this size. All right, I'm going to get back to log scale, and then we're going to apply ratios. For example, that this 1.618, 660 is just equal to the bottom of the fourth, so 200 plus 1.618 times the difference between the top here and the bottom here, which is roughly 310. So 22010 plus 1.618 times 320 equals roughly 660. Okay, And now, guys, look. So Elliot is saying that if the fifth is extended, we go here to the 1.618. And very interestingly, we have here this consolidation around this level. And this is another thing I wanted to tell you about Fibonacci, is that sometimes it's giving you very clean reactions, but most of the time it's going to be areas around which the price action will hover. It will just stay around those levels because they are like, I don't know, some magnets, you know, to the price action. They're going to attract the price action that is going to stay around it. The reason behind is that many traders are using those numbers as targets, you know, for profit takings and to reload and buy the dip. So here we can see, guys, that we have very clean consolidation just around the golden number. Then we go to the next one. And you see, okay, here we have something. We didn't have any number, but otherwise, guys, it's very interesting. Here, 2.618. Then here, perfect reaction. Here, definitely you cannot deny we have a consolidation exactly on it. This one is a bit more messy, but we have some reactions. Then here, guys, it's pretty obvious here as well. Here, okay, we have nothing. I agree. And we still have it a bit here. So it's just very interesting to notice that those projections are giving you areas of resistance before the price action goes there. So this is the first thing we're going to remember. Now, if I try to, but I can see that we are far from the 1.618 ratios because the fifth wave here was extremely extended. So I'm going to try to use the same method that I'm going to apply to another wave. So 1, 2, 3, 4, 5. Okay. I'm going to put it in blue. All right. Change the degree to the minor. And here we go. So we're going to do the same thing. We're going to measure because this is what it is all about. 1 plus 3. And we're going to observe where the fifth wave is going. And here, surprise, it's going to the 0.618. Okay, so I measured 1 plus 3, I applied to the bottom of the fourth. The tool is here, guys, for those who want to try. Trend-based Fib extension on TradingView. And here we go to the 0.618. Exactly like it was said here, guys, in this book written 50 years ago. In a third wave extension, we have usually this ratio. So the fifth wave is equal to 0.618 times 1 plus 3. And this is exactly what happened here, because indeed we can see that the third wave was extremely long here between the 90s and 98. So once again, we have here the Fib projection ratio, and we're going to keep doing that. Now, if I try to apply it, for example, we're going to check if it was working because we already have a counting here. So we're going to just check what kind of ratios did it give us. Oh, funny. Exactly the same. We have a third wave extended here, and the fifth wave is going to the 0.618 and then corrects. Okay, interesting fact. And what about doing it here? So 1 plus 3. Okay, this one is not perfect, but we got very close. Actually, it is, guys. Okay, it is not. It is not, let's be honest, but we are close to the 1.618. So we are close to the situation when the fifth wave is extended. And so basically we can see I just applied this tool 3 times for now on all the 1 plus 3 I was finding. So basically you can do it pretty much everywhere, and just you're going to see by yourself that usually we go to the 0.618, 1 or 1.618 ratios. So for example, if I apply it to the S&P 500 and I measure 1 plus 3, I apply to the bottom of the fourth, this is giving me, so depending if we have a fifth wave extension or not, but for now, we are already above the 0.618 that by the way gave us a reaction here at roughly 4,000. So my guess is that we're going to have a fifth wave extension and that we're going to get close to the 1.618, 6,600. So this is a very interesting information I can have using Fibs on the global markets. I already know that we would probably go at some point to the 3,700 level. And I also know, I believe that we're going to go at some point at 6,600. So this is, of course, a long-term process. Maybe I'm not sure in which way we're going to start, probably with the dip first, So it's not easy to build up a view here, but I'm still gonna try. And what I would say is that, sorry, up, we can get rid of that. So maybe we're gonna push a bit higher first, then correct to the 3,700 level, okay? And then complete this move. And then maybe we're gonna have a deeper correction, all right? I believe that at some point the market is gonna correct this entire move because we have a lot of, this is a third, fourth, and this is a fifth, all right? So at some point we're gonna correct this entire move, but this is not the point of this video. The point of this video is just to show you how to use those ratios and to remind you that, of course, it's not easy. So here, my view can only be that we push higher right now, or maybe lower right now, I don't know, but we're gonna go to the 3,700 level at some point, and I'm gonna be a massive buyer at this level because I believe we're gonna go to the 6,500 level after that, all right? So you can see already two strong implications that are coming, in my view, from Fibonacci and Elliot Wave theory applied together. Now, I want to show you another thing on the Bitcoin. So I have prepared that already. So it's going to be quick. It's giving you fantastic results. All right. Basically, you need to go to markets that are really growing. If you take a rangy market, Fibonacci will not give you amazing results. But if you take a bull market, then it's usually quite impressive. So here, what I did, guys, I just measured this entire move, started in 2015 to the first top at in 2018, 17. Around 20,000. I applied to the bottom here and I have my protection levels. And once again, guys, it's very disturbing to see that those levels are magnets. Okay, you can see you have all the Fib ratios and almost every high or low that you have, and consolidation is building around these levels. So it's like you know, in the universe, you have the dark matter, and it's actually ruling the space between the matter, between every planet, like magnets. So we don't fully understand the dark matter, and we don't fully understand Fibs as well, all right? We don't know why it's basically hovering around those levels, but it's just the market structure. It's like this. It's probably coming from the fact that the price action is just the collective subjectivity of every investor that, you know, act as a mass, as a group. And whenever you have some complex system like this, that when you have this group behavioral mechanisms that are at place, I think there is maybe something, you know, that is controlling all of these thought processes. And without even knowing, when we act as a group, we actually converge to what nature is doing, which is basically using the golden number everywhere. That's the best I can tell you. That's really what I think. Once again, it's maybe a question of belief, but you can't ignore the facts that are here. And you can check every growing stock, crypto, whatever. You're gonna see, if you do the small exercise that I've just done, that this golden number is everywhere. And if you want really to understand how to use it for trading, so I invite you to read Elliot Wave book, where he gives a lot of information about the ratios. And once again, my method, I remind you again, is just to identify the wave counting. Then you start to measure the potential corrections. And depending on how it was happening in the past, you're going to place your orders between 38.2 and 61.8%. And you're going to stop everything around 78.6, because once we go there, usually we make a new low. So if you did enjoy this video, please don't forget to click on the sub, like, and bell button so you're going to be the first to know when I upload anything new. And stay close to shore. See you guys.